Good morning, everyone. This is Brad Matheny. Today is the 12th of November. We're getting very close to the Turkey Day near the end of the month, and we are starting to roll into my anomaly zone. So, this is probably a rolling pattern right here. So, what I need you to focus on today is that we've had this post election bump, this really big shift in the market back up into this trending. You remember I highlighted this trending. This is a daily chart coming all across this area, these two lines, this one. Try to make it thicker, I guess, so you can see it. The blue line here and the blue line here. These are the channels that I expect price to try to stay within after this big bump. You can see we have this gap down below the channel and then a gap up. In fact, let me come over here. I was using this to show somebody stop placements, but so here we have some rolling trend. Now, this was my analysis. I'll keep most of these lines, but this was my analysis with regards to the Fibonacci and price function. But if we take a look at this gap, you can see this, and I'll try to make this a bright purple or dark purple. You can see this kind of trending, and I'm going to really just anchor right off of this gap here, down here, right across this trend channel. And you can see we've got this isolation, this island down here that is an isolated island right before the election. So the idea that we're back into this upper price channel here, to me, means that we're looking at a fairly strong potential for price channeling throughout this level as my potential anomaly event sets up. Now, if you remember right, I've indicated that we could have around a December 10th through 15th kind of an anomaly event. So I'll just highlight these here, even though it's a little wider, make it a little more functional. December 5th, 10th through 15th. So right in this area, I believe we could set up a what I call anomaly event. Now, an anomaly event, I'm going to go over some of these today, could present a very real market contraction back down into these lows before we roll into some post-election late stage rally phase, carrying all the way out, folks, all the way out into February and beyond. So be aware of this late year contraction that I think is going to come from some sort of an event. And I'm going to talk about those later, going over some of these sectors of what we need to watch for. So look for the anomaly event, could be setting up, just as I suggested in my special research report, suggesting that the post-election move to the downside could move down into these lower channels. And where we're at with these lower channels, you can see here from this chart, we've got these broad channeling going all the way back to 2023 across this middle channel, which we're just now above, which I believe is toppy. This lower channel running right across this low, and this upper channel, which is the impulse move. And now typically, if we were to look at like a fib speed fan and we were to go up to this initial impulse move, you can see that we are now rolling down through this channel here. This would be the 382, 382 channel. Right across that 382 channel, right there, gives us kind of where we're at, holding above this 382 channel. The next move would be down to this 550 level. So the next move down, if we were to break this channel, would be down into this area. So give you an idea of really where we're at based on the fib speed channel, indicating we could see a low down in the 565, 567, 568 for the SPY through the anomaly event. So it could be a fairly deep low setting up, from where we're at post election here. That's about a 5.5% downside move. That seems reasonable to me. Okay, so what we're going to do is we're going to look at the SPY cycle patterns. We're looking at a top resistance in carryover mode. We are in bullish. We are in bullish long-term trend, explosive price action, bullish short-term trend, and we're in bearish counter-trending biasing mode. This is a special indicator that I've created that tells us essentially what the general market bias is. So we switched into bias trending about 3.5 weeks ago. And generally, we are in bias trending. Now, downward bias trending suggests that, the market, like for example, if we come back over here and we look at our bias trending would generally be like this type of trending here. Now, we would move into bias trending through here and possibly carrying out into this area before we flip into bullish. So we had gone, I think we were in bias through here and then went into bullish. And I actually have a bias chart, but it shows you the data. So anyway, I'll get to that later. I don't want to waste a lot of time on this. Okay, so let's come back over here. We're looking at a top resistance pattern in the market, then consolidation, then a temporary bottom, then a gap trend in counter reversal. Now, consolidation is in counter trend and gap reversal is in counter trend. I highlighted a couple of weeks ago that I thought this area, this breakdown from roughly today all the way into this basing and bottoming mode. Remember, this is a counter trend rally and then a rally. Would set up some sort of a base or a bottom. So I thought that this entire downward swing starting today, carrying all the way down through the end of the month, would likely result in a downward cycle trend. So if we were to look at where we're at today, all the way through the end of the month, we're looking at a fairly broad potential shift into a downward cycle trend right now that I think is going to be fairly clear, moderate downward trending, maybe a bit deeper than most people expect. We have a lot going on right now. Okay. We have the transitional process of the presidency. We have the markets trying to react to this post-election move. Remember, as I keep telling you guys, nothing has really changed. We have a president-elect, Trump, who is now going to come into office around the 20th or 21st of January on Inauguration Day. Until then, until that time frame, we're looking at a transitional period where, who knows what can be done. Biden can do things to try to move the needle in a certain way. The markets can do things. The Fed just lowered rates, I believe, because they're concerned about general market hard assets. And that's really what I want people to be aware of, is that we've got a very strong potential for an anomaly event setting up. And I would be very concerned about a downside move right now following this big rotation. Now, we would likely set up some sort of an excess phase peak pattern, breaking downward into consolidation, and then maybe rallying to the upside or breaking downward. So here we go. Okay, we're going to see what ends up happening. Now, we come back over here, come back to this chart and spread it out a little bit. So be aware that we're now near this upper channel. We are rolling into this type of a rolling downward trend right now. And I think we need to be very aware of the volatility setting up. You can see how I've kind of drawn this market. Get rid of this, get rid of this. We're basically, guys, looking at a rolling top here. So, I mean, I've kind of drawn this. This is a good example, this red level. We're looking at a rolling topping pattern. I believe we're going to roll down for the next 4 or 5 days, trading days, and then roll slightly upward for another 2, 3, 4 days, 5 days, and then roll into consolidation before breaking downward near the end of the month. So be aware, we could see a very solid shift into the anomaly area. And you can see here that I've actually marked this anomaly zone with this red box. So here's the red box. We're started yesterday through the anomaly zone. And the price anomaly really is, I think, a hard asset reset. So we'll see. So now, gold and silver is in a bottoming formation in counter trend mode. I do believe that gold and silver are going to seek out some kind of a low. We're going to have to see. Obviously, this is a fairly deep move in gold and silver. I will tell you that this is very reminiscent of some sort of a panic mode related to the shifting presidency. I haven't seen gold move like this really since almost COVID. This is a 7.5%, 8%, 7% downside move in gold. This is a roughly 12% downside move in silver. I mean, it's been quite a while since we've seen a downside move equivalent to 12% in gold or silver. I mean, the last time would probably be right here if we take a look at it. And that was back in August. That's a 16% downside move. And that's right before the election. If I remember right, that was right around the time of the Kamala crush. I think that was right in this area here when everybody started questioning Biden's capability and the Fed lowering rates. So we're in a mode here, guys, where we've seen a very substantial downturn in the market, and we really haven't seen anything like this in 5%. Yeah, nothing like 12% up here. I'm still under the belief that this is a great opportunity for traders. I mean, I am under the belief that gold will continue to rally and that gold is setting up a very deep low on some sort of a panic move. So we're looking at a bottoming formation and counter trend. Then we get a blank pattern in trend mode. Then we get a top resistance, a carryover, and then we get a breakaway, a trend, blank bar, a trend, temporary bottom, and then a gap potential, and then we move into trending, hopefully. We are still bullish. We are still explosive, believe it or not, in gold. We are not seeing a massive contraction event. And I want to just let you know that we're seeing very solid trending, although not in the spot market. So you can see here, I'm using GLD because this is part of an Excel file, and I will make sure these numbers are correct, but look at this. This is still from 80s to 70s to 90s, 98. I'm going to make sure that is correct. In fact, let's come back over here. I must be looking at the SPY. Yeah, I must have changed it to the SPY by mistake. I'll go fix that. That must be an error because that is not correct. Okay, so let me fix that and I'll get a new one up. In the meantime, let's come over and take a look at Bitcoin and sectors watch list. Come back over here, watch list. Bitcoin has rallied up into the 90,000 area. And again, I drew some expansions out here at about 85,000 yesterday, thinking that would be a fairly common high level for Bitcoin. And I think that we've seen a pretty solid move here. I mean, you can see that we've got almost 100% move here, in actually probably 140%. So we come in here, fib extension from this low up to here, back down to here. We've got 100 and 1 point, roughly right down to here, 1.382, just above the 100 mark area. So we can presume that this area is fairly overextended in Bitcoin, and we can now presume that Bitcoin is likely going to contract a bit. So what we're looking at here is we're looking for an excess phase peak pattern. And you can see that we don't quite have that excess phase peak pattern. We do have a fairly strong rollover taking place right now in Bitcoin, down 3,000. And this could be, like I said, the start of the anomaly event. What I would be expecting in this mode after this big rally phase after the election is I would be expecting a pullback and then flagging. I'm just drawing this as an example. I think we would get out of this overbought zone down here into the 81, 82, 83,000 area and then move into flagging before potentially breaking down into consolidation and then potentially breaking down into lows. Now, this may seem like a massive move in what I'm drawing, but in reality, look at this. This basically comes right back to where we were on November 5th, the election. So this is potentially a move right down into this area, which aligns very closely with where we were back before the election. And that would set up a very solid base that would actually move through my anomaly zone very cleanly. So this could be a very big reactionary move. And then we could see a big drop, maybe right back down into these levels, or maybe up into these levels, 72,000. It looks like we're going to be seeing a fairly big rotation into my anomaly zone. Now, lastly, I wanted to go over some of these sectors. So here we are on the SPY. We are going to go over here to the sector spiders, and we are going to look at energy. And I'm going to do this on a weekly basis for you so we can take a look at the bigger trends. Energy, you can see, is very cleanly moving across kind of this channel, but we also have this kind of sideways flagging formation setting up. Now, my expectations for energy are that energy is going to collapse into the election, maybe back down into this area before we get some sort of a move to the upside. Okay, so be aware that this is the anomaly event setting up. Utilities, we are going to be looking at a pretty solid upward trend. Utilities hold up pretty well overall. I'm going to have to redraw that off of this. I think utilities hold up pretty well throughout the end of the year as a safety mechanism. And I would suggest that we would see moderate upward growth through utilities. XLK technology is holding up pretty well. I think that we're going to see innovation and technology continue to play out. There's a research article that's available. I think I did it here. It's called the .com bubble on TradingView. You can look it up. I'm pretty sure I posted it here, but it highlights how technology is going to be the next phase of big growth into 2030, 2035, and maybe into 2040. Hopefully, I'll still be around. I'll be pretty old by then. But again, I think technology holds up throughout the end of the year and into 2025. XLB, this is the materials. Materials are in pretty high demand. I mean, we're still clicking right along. We don't have any big recession. I teach people to try to draw these types of trend lines, and I'm going to have to come to here. This is kind of an outlier. Now, given where we're at through the transition, and given what the economy is doing, and given the fact that I expect kind of a hard asset reset, we could see materials flatline out here. Okay, so understand we could see materials move into a flatlining type of a trending rotation, maybe into this range over the next 6 months while we're trying to get settled after the presidential transition. So be cautious through materials. We're looking at here the consumer staples fund. Now, consumer staples, depending on what ends up happening, and this is again dependent upon market trends, you can see we're already kind of below this channel. And this is why I think we're looking at a potential broader breakdown, setting up a flag into this area. And of course, that would mean that we would come down into consolidation and maybe into a downward excess phase peak pattern. Now, that could have been too big. So now this breakdown could be into this area and then maybe down into this area for the low. But again, staples are, contingent on the economy staying out of a recession. So I know that President Trump has big plans. He's going to probably come in and try to make some immediate changes, but I imagine that he's going to be cautious of really disrupting the market. I think what I'm more concerned with right now is the state of the markets right now, the bond market, the debt market, the fact that we've kind of overzealous rally phase into this end of Biden presidency. I'm thinking that, and I mentioned this a couple of weeks ago, I think it was about a week and a half back, that it kind of reminds me of 2008, the election in 2008, where, everything seemed like it was rosy until 2, 3 months later when it wasn't, when banks were failing. So again, real estate seems rosy, markets are up high, Bitcoin's up high. Everything seems like it's rosy until it isn't. And maybe we're going into a shift. So be aware of this anomaly event setting up. XLY is consumer discretionary. You can see that discretionary's had a big bump. Let me come in here, run my trend lines again. And again, this is what I'm trying to teach you. You can learn quite a bit by drawing trend lines. Now, I go off of typically rejection. Well, I'm looking for rejection. So to me, this is rejection. Price comes down, price tries to get lower, completely rejects, goes the other direction. Price is dipping down, opens much lower, rejects, backs up to the upside. So to me, this is rejection, and I can use that as a trend channel. And then I'll come across the highs here and I will look for rejection points again. I do sometimes let the market go outside of the zones, like here and here and down here. The purpose behind that is support and resistance is like a fuzzy level, like a water level. You can go underwater or above water periodically. You don't stay right at the water level. It's not like a concrete wall like some people teach you. It's a floor or a ceiling. In a way, it is a floor or ceiling, but think of it as a soft floor or ceiling. It's like going up in an airplane. You go 1,000 feet, and then 2,000 feet, then 3,000 feet. You don't break through any barrier going above those levels. You just move from one level to another. It's a soft barrier. So in this particular case, you can see really post-election big rally phase, and this is something that I think would end up being a big, broad pullback into flagging and then into consolidation and then maybe some sort of a breakdown. Now, understand that I'm giving you a warning of what I think is happening or could happen in these sectors through the next 4, 5, 6 months. Okay, so now we have the industrial sector. Okay, big trend change. So you can see here this is what I call shifting channels. So you can see we've got these channels in place. Then we have a shift into the upside here, setting up our secondary shifting channels. Now, what happened in this area, I'll leave that there. What happened to cause this shift? Well, this was 2024. This is this year. Industrials really became a safety. Now, why did industrials become a safe haven compared to the other markets? Fairly simply put, technology's been struggling. Innovation and dividend stocks have become the safety mechanism as we've hedged. That's one of the reasons why the industrials have really moved up, is because many of the industrials are dividend producing stocks. So for a safety mechanism heading into an election year, money rolled out of speculation and rolled into safety and dividend. That's why industrials have performed quite well. Now, as we move out of that safety zone into a potential new presidency, we have the potential to actually see the market shift. And we're already seeing that. Innovation is shifting. Um, Other sectors are shifting. That's why we're talking about all these spider sectors right now. So there's a very good chance that this post rally phase could come right back down into this area and try to find some support. So understand that this whole move, which was really 2024 centric about money trying to find safety, and that's what I want you to realize is money always tries to find safety, security, and opportunity. If the opportunity doesn't exist, like for example, let's say Trump comes in and he's fairly aggressive about what he's trying to do to get the economy back on track, knowing that the Democrats are going to try to stop him all they can. Let's say that he disrupts the markets a bit. You could see money moving away from this safety into other sectors that are perceived to be a greater value. And so industrials really do have, they have an opportunity to make this move. It's not a crisis, but they also have the opportunity to continue to just trend within this channel into 2025. So you see, we have this very broad kind of an upper channel here, and then a very broad, let's call it middle channel here. So we have that ability to stay within that channel, continuing higher. But I still believe that we have a chance of moving down potentially into this 128 area, which would be from where we're at now, about a 9-10% downward move. Okay, communications. Communications are probably going to do pretty well. You can see it's been rocketing higher, and you can make a lot of money just trading these sector trends. These are fantastic big money trends. I mean, look at this downward move here, 43%, upward move here, got to be 140. Oh, it's close, kind of, 99%. Big moves. So now we take a look at the trend channels. We come off of this rejection point, and I'm visualizing right across these lows here. Because this is a standout low, I'd come up and look at these rejection points here, and this would be my trend channel. Then I would copy it and drag it up to this upper level. I'll get rid of this so it doesn't confuse you guys. And there's our channel. We're in that upper area. I think communications continue to do well. This is part of the bot-com type scenario. The communication capacity of being able to build autonomous robots and communicate effortlessly and wirelessly, I think is going to continue to do well. So I think we just struggle into a sideways trend into 2025. XLV is healthcare. Healthcare typically is going to be doing pretty well. I mean, I'll be honest with you. I think that we're in a new age in healthcare as well. My fiance was in the hospital a while back, and it's amazing. They have little portable X-ray machines and everything. Everything it's gotten to the point where it used to be a big old box in a room, separate room with lead wall, and now they just roll everything around with portable X-ray machines. Before you know it, in another 5 years, they'll be handhelds. They'll just point to you and scan you, and you never know. It'll be like Star Trek. So I think healthcare continues to move through this phase slightly higher into 2025. Financials. Now, financials are really interesting because financials right now have been through this big safety mechanism. We've got a lot of issues with banks. The Fed has been fairly accommodative. The raise in rates has helped banks start to accumulate a little bit more in interest rates. But we've gotten this big, solid rally phase here, very similar to the post-COVID type of a rally on a raising interest rate scenario. And I do believe that financials with a potential hard asset reset, could come back into this area 40, 41, 42 on a fairly deep correction. That would be about a 16 to 17% correction. Really, I'm more concerned about a rollover kind of in this area. Oops. Into this 8, 9, 10, 11, 12% into the early 2020 or late 2024, early 2025 area. So this is very similar to a post-COVID rally phase. And again, it's a little unsettling in the sense that we've moved into this big rally phase in financials with so much risk in the market, especially with an overheated, hard asset market and real estate market. And you can see here we've done the same thing. 2024 has been fairly solid for the real estate sector. Even though rates have been increasing and, big discussions about consumers unable to actually maintain affordable housing, it's very different than 2025, 26, 27, even 2028, 29. I mean, we've got rates that are higher than I think we've seen in mortgage rates in probably 20 years, maybe 15, 20 years. And we've got an economy that is, like I said, technically struggling a bit at the moment. So, where do I believe this is going to go? I think we're looking at a hard asset correction. I think we're looking at a move possibly down into this area. I think we're looking at a hard asset contraction into early 2025. I believe the printing and the spending has been, I don't want to say exorbitant, but let's just say it's been enough to float the world probably twice. The US has spent enough money in the last 8 years with COVID and pre COVID that we could probably have floated global economies twice over. So we have a lot of money floating around in this scenario. And again, if we come back over here to XLI, I've already drawn these, but, look at this from a monthly standpoint. Okay, I'll get rid of these lines just to show you. We've gone parabolic, folks. We have literally gone into parabolic trending. And this is, like I said, when you start to look at this and you start to see this type of a move, we are in, as I mentioned to you, this to me, this is the wave 4 correction. We're in a wave 5 move. If we were to just quickly come into here, look at this Fibonacci extension from this wave 4 correction up to here, come back to here. We're already pushing up into the 1.382 levels. We're already above this level. If this is a wave 5 move, which I believe this is a wave 3 peak, so you can call it right here. So let's call this number 3, and let's call this number 4, and let's call this somewhere way up here, number 5. If this is correct, and we're looking at this type of a correction, so we'll draw the wave 4 correction from here to here, then we're looking at a wave 5 expansion. This would be wave A to here. This would be wave B, roughly to here. Now we're in the midst of setting up a wave C. So if we look at a wave C, we could initially count this as A, B, C moving up to a D correction to an E. And that would just be the beginning of wave 5. This is the beginning of wave C. Okay, this, I think, to me, this is a wave 1 of a continuing expansion up to the upside. But like I said, we've seen this expansion, we've seen this growth from here to here, roughly to here. We've gone up to approximately 1.618. Let me spread this out so I can see it. Yep, right here, 1.618. We're right at a 1.618 level right now, right here. That's a 1.618 expansion of this original wave A move right here. So think of this as, let's make it a small 1 or an A. Let's call this our B, and let's call this our C. Very indicative of a peaking pattern near this 1.618 area, potentially setting up an anomaly event, potentially setting up some sort of a deeper downside trend. And we'll have to see how it plays out. But I want you to be aware that long term, we have gone into this anomaly or this parabolic phase in a wave 5 expansion, and we are now getting very close to a wave. Again, this would be a wave C contraction setting up to a wave D mode, which I think comes in actually December or into 2026. So if I were to give you an example here, I think what we're looking at now, this is monthly. Okay, so here we go. I'm going to show you. You have our A, B. So I'm going to come to here, draw it out. A, B, C, pull back, and then E. Now, the correction of this trend, of this move, and I may have drawn this out a little too far. So let me try these again. I'll just go A, B, C, and then I'll do this. Then I'll draw the pullback and then the rally, and then we get into a broader pullback, which will be the correction phase, maybe 3 waves, maybe 5 waves. And this is going to be the D and the E completing wave 1. No, this is not going to be completing wave 1 of wave 2 of 5. This is completing complete wave C of wave 5. So now, if this analysis is correct, then this pullback here, however deep it is, and again, wave C, so this pullback here may not be that deep. Let me correct this. So we come back potentially to here, come back up to here. Now we have to be cautious of staying above these levels. So more than likely into this area, and then we move into the next phase, which this will be our D, and this will be our E. And that is just wave 1 of wave 5. So understand that this is nothing more than wave 1. Then we move into a pullback, potentially down to here or so, and then we move into wave 2. So all of this from here up to here is wave number 1 of 5. Correction. This is from here to here is wave number 1. Okay, and then we come down to here, wave number 2 of 5. Eventually, we will move way up here. And when I say way up here, I'm talking potentially way up here into 3 of 5. That's why this is the greatest opportunity of your lifetime. we're talking about the potential for by the time we get to the end of wave 3, maybe 168% move in XLI, which would be stupendous. Okay, so be aware that we're in this parabolic trend. And what I was trying to show you is what kind of moves we're looking at over the next 2, 3, 4 years before we get into this really big expansion phase. Now, it could be a lot quicker what I'm expecting here. In other words, all of this can get condensed into, kind of like this, really skyrocketing. So it can get condensed down into 2, 3, 4, 5 years instead of like I've drawn it out almost 10 years. But again, this is where we're looking, and this is what I think is the likelihood of opportunity going forward into 2035, 2036, and why you need to pay attention. Okay, wow, 40 minutes. Well, I tried to keep this short. I am going to let you guys go get some today. Remember, we're rolling into a potential topping pattern. Pay attention to what's in front of you right now and play the long term chart. Remember, protect your capital. Rule number one, protect your capital. Make sure you have it available when you want to trade. That's rule number one. This is not gambling, this is investing and trading. If you want to gamble, go to a casino, bet it all on red or black, see what happens. The whole rule about trading is protect your capital, contain your risk, and take advantage of opportunities. That's it. Okay, guys, talk to you later.